and welcome to the pre-market update from Nirmal Bang. I'm Dadia. Let's quickly understand how the markets are expected to react today, taking into consideration all the global cues as well. Stocks in the Asian markets have been trading lower. However, you have Hong Kong as well as Australia that are closed today. There is some bit of indication that is coming in from Dow futures as well as Nasdaq futures, which are pointing to a drop in terms of today's session. In fact, last week it was a truncated week for global markets, taking Easter into consideration and Good Friday. In fact, for the week, Dow posted its 7th best weekly performance, whereas S&P 500 had its biggest one-week gain since 1974. Now, the reason why we've seen this kind of a rally in global markets is because Fed also unveiled the $2.3 trillion stimulus package. However, if you talk about the jobless claims in the US, they continued to surge. However, overall, European markets also closed higher. Pan-European stocks 600 closed higher by almost 1.4% on Thursday. Whereas on the back of the jump in jobless claims, if you see the 10-year treasury yields, they have fallen slightly. So that's the update in terms of global markets. In fact, if you see crude as well, crude prices are up in terms of Asian trading hours. However, the major reason coming in over here is because OPEC and the allies have actually finalized the record production cut. In fact, they've decided to cut production by almost around 9.7 million barrels per day. Earlier during the week, last week when we spoke to you as well, we clearly indicated probably the production cuts could be in the range of around 10 million barrels per day to almost 15 million barrels per day. The desired number as per Canal as well was around 15 million barrels per day. So let's see how oil reacts to this during the trading session. Moving away from there, overall Mexico will cut almost 100,000 barrels per day, so that's something which is going to be encouraging. Now the 23 nation group will meet again on the 10th of June, taking cues with regards to where precious metals is concerned as well. Overall, gold has hit a 1-month peak, and this is again fueled by Fed's new stimulus measures. In fact, holdings of gold by ETFs rose in March to a record high of almost 3,185 tons, and this is worth almost $165 billion. Palladium was trading under pressure. However, platinum and silver saw some marginal gains to the tune of almost around 1.5% to 2%. Taking cues from all of this in the domestic markets as well, it's a very interesting trend that we are figuring out from the FIs. The FIs have again started to buy. We've seen a buy number worth almost 1,738 odd crores in the cash market, whereas DIIs have been sellers right now. Overall, also, if you go to see in terms of SGX Nifty, the indication that we are getting is again a negative start that could be on the offing, because almost 100 to 120 points cut is what SGX Nifty is indicating, and a start below that 9,050 mark. Overall, in terms of market cues as well, clearly, last week a 13% surge is what we've seen on the indices, and this was the biggest weekly gain since May 2009. In fact, the renewed FI buying interest is keeping us pretty much buoyed. However, COVID-19 situation is something which is really fluid. The uncertainty on the back of COVID-19 still looms, because till when the lockdown is going to be extended, what's the kind of economic impact it is going to have on our markets, that's something which we actually need to take into consideration. So overall, COVID-19 as well as global sentiments is something which we'll be seeing, and the reaction today in the markets is going to be crucial, because not only Indian but global financial markets are also opening after a gap of almost around 3 days. In fact, there is that emergence of buying interest that's coming in on Nifty, and all sectoral indices have also participated in the upside. So it's going to be an interesting day of trade. Even on the technical front, because clearly after 3 days, what's in hand on this front is going to be amazing. Let's quickly understand what the outlook looks like, because again a negative opening is what we are looking at. Selling pressure is expected during the day on Nifty, and we are expected to see a strong resistance at levels of around 9,190 and 9,270. On the flip side, 9,040 may act as a support level. If there is any move below that 9,040, there is a possibility that we could extend its rally towards 8,960 and 8,820 levels. So again, viewers, overall view is going to be cautious. It is going to be a stock specific market. Again, on Bank Nifty side, we face immediate support around 19,560 levels on the downside, and any decisive close below this, there is a possibility that we could see Bank Nifty falling further to levels of 19,230 and 18,740. Immediate resistance on Bank Nifty is seen at levels of 20,050 and 20,380. So these are the key levels we should be watching out for in terms of Nifty as well as Bank Nifty. And on the F&O front, open interest addition is seen at levels of 9,100, 9,000 and 8,900 strike put, and 9,100 and 9,200 strike calls. So again, that 8,500 to 9,500 remains the broad range. There is volatility that derivative markets are also indicating, but bulls are in charge. Bank Nifty upside still remains capped. Let's quickly understand which are the stocks we should be watching out for. Overall, if you go to see in terms of stock specific action, watch out for Dr. Reddy's. Their API manufacturing plant 5 at Miryalaguda has received EIR from the US FDA. US FDA has also requested all manufacturers to withdraw ranitidine products from the US markets, and that could have an impact on SMS Pharma. ITI will be in focus. They will be joining hands with DRDO to sell to produce portable ventilators. On Mobile Global will be in focus on the back of the buyback proposal. National Fertilizers has got a rating downgrade from ICRA, so you could see some bit of a negative reaction on that one. Godrej Consumer Products is expecting sales declining around low double digit in rupee terms in the fourth quarter, so again some bit of a negative reaction there. IndiGrid will be in focus on the back of an acquisition of a transmission project. SRF continues to remain in focus. Cadila has received a tentative approval for one of the anti-diabetic drugs. KSP will be in focus as well. You have Tech Mahindra, HDFC. Interestingly, People's Bank of China has hiked stake in HDFC to more than 1%. And lastly, you have Z Entertainment, where the board is looking to invest a sum of 522 crores in Sugarbox over a period of time. So overall, these are the stocks we should be watching out for. A stock specific market is what we are looking at. The volatility is expected to remain high as per the derivatives data, and overall there is expected to be a gap down opening after 3 days, and there is going to be that selling pressure. That negative cautiousness is something that will continue. That's all that we have in the pre-market update from Nirmal Bang. Thanks for hearing.